Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the micro bearish but eventually bullish scenario, as we are still looking for a bit more downside before then continuation to the upside, looking for 36k, where we also have a resistance area here sitting between 35.9k and 36.2k. In this particular scenario, we're then talking about a regular flat, a 3-wave structure in wave A being a zigzag, another zigzag in B, and then a 5-wave structure to the downside in wave C, where inside wave 3 we are counting a 1, 2, 3, 4, 5. Very nice indeed. And then a bigger 1, 2, 3, currently working on 4, and then you're going to be looking for another wave 5 towards the downside. Now for a wave 4, usually the maximum target is the 0.5 Fibonacci. You can wick above, but you don't really like to see candles close above the 0.5, which is sitting at 34.3k, and the 0.618 is not the level you want to see hit, where you also see I have the invalidation line based on this wick over here, because if this is wave 1 and this is your wave 4, a wave 1 and a wave 4 are not allowed to overlap in a regular impulsive structure, in a 1, 2, 3, 4, 5. The moment you see overlap, you have to think about diagonals, where we then have to think 1, 2, 3, 4, and eventually a wave 5, but that is way too early to call at the moment. Now in this scenario, the most common target for your wave C is down here in the yellow box between the 1 and the 1.236, taken from the high to the low of A to the high of B, which is sitting between 33.3k and 32.8k, which also means you're going to take these wicks over here before then continuation to the upside. We also have a double bottom, as you can see, which is like a magnet for price at 33.7k, so that is quite interesting. And still below the target area for wave C, we also have the low over here and the beginning of the 1 hour gap, which can act as support for then continuation to the upside. So in general, we're still looking for a move to the upside. However, for today as well as then tomorrow, we expect price to still find a bit more downside. Now in the other scenario, the more, let's say, bullish scenario, as now we do not expect to move to the downside for continuation, but we expect to continue the range, which considering the weekend, of course, is a great scenario, is this triangle over here. And Diego in the Discord group posted this picture over here, very casually, just a simple drawing thinking about a potential triangle, and that was a great idea. So there's absolutely probabilities for this scenario, as for a triangle these rules are very important over here. So a triangle can exist in a wave 4, X, B, Y, or a wave Z. 4 out of the 5 waves have to be a zigzag, and then a zigzag A, zigzag B, then you have eventually a zigzag C, which highest probability is finished, because then you have a 5, you have a 3, and then you have a 1, 2, 3, 4, 5. So preferably C is in, which also means that then I have the invalidation put over here below the low of wave C, because I wouldn't really like to see this one being taken really, as then you're going to create a bigger 5-wave structure instead of an ABC inside wave C. Then you're going to be looking for a wave D to the upside, where this over here is your wave A, and then a 1, 2, 3, 4, 5 corrective structure, maybe a bigger corrective structure, and you're going to be looking for a move to the upside, which is important, because if price moves towards the upside, you're going to invalidate the bearish scenario as well, where you're going to be looking for a wave C. So that's something to take into account. So here you do want to see price moving up, and the golden pocket for a wave D has confluence with this resistance area here sitting between 34.4k and 34.7k. So that is quite interesting. You also have a couple of highs over here, a triple top that have not yet been taken, so you could take this with the 786 hit, which is sitting at 34.8k, to take the liquidity, the triple top, before then a move to the downside, because the most common target area for the sub-degree waves in a triangle is the golden pocket to the 786. So that's nice for a wave C, would be nice for D. Then you're going to be looking for E before continuation to the upside, where if we're moving up for D, you don't want to see B broken. The moment you break B over here and you move towards the upside, the triangle is invalidated. And if you move down for E, you don't want price to go below wave C. And preferably, what I like to see is between the low of C and the low of E, I like to see bullish CVD divergences, higher low in price but lower low on this CVD. That is something that for me would be ideal in this particular scenario. And of course the weekend is coming up, so maybe throughout the weekend this is like a nice weekend range before then continuation to the upside. Now, if we look at the confluences in this particular range, of course, the volume profile, very much enjoy using volume profiles when we don't have too much horizontal levels going on. However, we do have a daily naked point of control floating above price over here at 34,225. So that is quite interesting. We, of course, have the range over here. Trade the range until it breaks, they say. No financial advice, obviously. But what happened yesterday after the video is price moved to the downside very nicely indeed, which was the highest probability scenario. Move below the target box that I have over here. We broke it to the upside, found support, 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 broke it to the downside, hitting the point of control, and then over here we move back towards the target box, which now acted as resistance. That's very, very nice indeed, for then a continuation towards the downside. And now over here we are at the downside. So it's basically a bit of a neutral environment between the two scenarios, because we are like in the middle between either up or down. The invalidations, of course, are very clear at the moment as well. Now, if we zoom out, bearish CVD divergences over here and bullish CVD divergences over here. Lower high on price by literally a few dollars. And here we have a higher low in price. Lower high in price, higher high CVD, higher low in price, lower high on the CVD. This small bullish CVD divergence has already played out, so that was nice, which gave this kick to the upside. And now, yeah, between the bullish and bearish scenario, it's a bit of a waiting game, because they are contrasting each other, of course. Usually the one that exists first has the highest probability of playing out, but the problem for me with this bearish CVD is that it retraced so high compared to the previous high over here. It just missed out this high by literally a few dollars. However, it was the first one that appeared on the chart, which therefore has priority over the bullish CVD divergences, which only started to come into play the moment price was already moving to the downside. Now, importantly is, if price can invalidate the flat scenario and move up a little bit more and then come down for a potential wave E, and you start to create bullish CVD divergences over here, then for me these will have priority, because with CVD, the most recent, the newest, the more local CVD divergences, these are the ones that have priority. So if this is going to be a scenario with bullish CVD, then these are going to have priority for me. And if we then finally look at the probabilities of the different scenarios, then as it stands, and as long as it's not invalidated, a flat scenario with still a move to the downside in a wave 5 has the higher probability. Now, of course, we are in a 1, 2, 3, 4 and then a wave 5, and usually a wave 4 is longer in time than wave 2, so potentially we get a bit more of a range. We could still wick this high as well before moving down, but importantly, the moment this invalidation is hit, probabilities are switching towards the triangle scenario. Now, for a triangle, usually you really want to see like wave D being in the making, or maybe even being in before the probability switch to a triangle. So that is also another reason why at the moment the flat scenario has the higher probability of playing out. We also have the double bottom over here, which is very, very interesting. And the moment you take this double bottom, a triangle would be invalidated. It's going to be very unlikely you're going to have a triangle, as at the moment this could be a nice interesting ABC, but if you take the low, it's going to look much more like a bigger 5-wave structure. So we have to keep an eye on the invalidations. Of course, important, we are at support. Shorts were very nice over here. No financial advice, right? But the shorts were over here. We're now at support. If price moves down, all good, all fine. I'll be just looking for long positions over here that follow my plan, my strategy, my entry requirements, which I recommend everyone to have. I hope this video was very helpful and valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.